Good afternoon, everyone. Nice to see you all again. I am C. Ankit Sharma, your income tax faculty for the session. So, after a long time, or we can say almost after 1 month, we are again together and to complete today's chapter, which is TDS, TCS, and advanced tax. And I believe that you must have gone through with the provisions of last time we have discussed the provisions of income from other source. And I guess after that, you must have gone through with the provisions of clubbing, then I guess a set off of losses, and I guess deductions also you must have completed with the other faculty. And I believe that you must have understood a lot of more provision like what is clubbing, set off, and deduction. So we are actually processing at the end of our income tax syllabus. We have three topics left. First one will be the collection of tax topic, that is chapter number 7, TDS, advanced tax, and TCS. Then after we will move on to chapter number 8, that would be return filing process. And then the last, that is collection, payment of calculation of total income and tax thereon. So a lot more to cover, but this is actually the last phase of income tax, what we are discussing one by one. So good afternoon to everyone once again. Lahari Morju, good afternoon. B. Sai Kiran, good afternoon. Nitin, Kasak, Manvi, Apur, Dinesh, Malu Jadar, Preeti, Nitish, Niru, Prakriti, Abhishek, Bhumika, Hardik, Vismita, Nitin, Nitish, Ragini, everyone. Mr. Bal Murugan J also. A very good afternoon, and I welcome you all in today's session. Today we will be discussing the collection of tax process of income tax. Before starting this concept, what are the provision in this chapter, etc., let me give you an overview regarding these chapters, then we will start the process. So we have already discussed in basic concept, and I believe you must have remembered that in the basic concept topic we have discussed one thing, that was income of previous year is going to be taxed in assessment year. Remember, we have discussed this concept in basic concept. That's the charging section of income tax, which says income of previous year is going to be taxed in assessment year. Or we could say like this, that whatever you will earn in previous year, our previous year is 24-25. We need to pay tax on this next year. That will be our assessment year. So that technically that means we will pay tax in 25-26. So in that chapter, we could understand this topic, that we need to earn income in this year, and whatever we will earn in this year, we need not to pay tax in this year, but we will pay tax in the next year. Suppose if we earn 10 lakh rupees in 24-25, then we need to pay tax on this income in the next year. Suppose it will be 1,12,500, suppose. So this tax is not need to pay in earning year or previous year 24-25, but we need to pay this tax in 25-26. So in the basic concept, we discuss this thing like this, but that is not completely true, because income tax collect this tax of 1,12,500 in previous year also. Why? So the charging section says that income of previous year is going to be taxed in assessment year, but it does not mean that you need to pay all tax in next year. This part of income this tax, out of this 1,12,500, some part or maybe all of it, you may need to pay tax on this. The collection of tax need to be paid in this year only, 24-25. So this tax, what we in starting chapter we understand that the tax need to be paid in the next year. That is not completely true. The tax we need to pay next year maybe need to be paid in the same previous year by way of different kind of collection process of income tax. We are not discussing about those cases in which income of previous year is assessed in assessment year. That were different cases. That was exceptional cases, but we are now in the normal cases. So if I am earning 10 lakh rupees in this year. So my estimated tax might be 1,12,500, which I need to pay next year normally. But that is not completely true. In some circumstances, maybe I need to pay this tax in the 24-25 itself by way of different kind of collection process of income tax, one of which is TDS, other one is it might be a TCS, and it might be a advanced tax collection process also. What is TDS, what is TCS, what is advanced tax? That is we are going to discuss in this chapter. And if anything balance has been left even after collecting via TDS, TCS or advanced tax, suppose out of 1,12,500, 1 lakh only has been collected via these mode. Why we need to pay that? How we are going to pay this? That is going to be discussed in chapter. But suppose if my tax liability, estimated tax liability is 1,12,500, but out of this tax, maybe some part of tax need to be paid in the previous year 24-25 via TDS mode, TCS mode or advanced tax mode. And if anything balance has been left like 12,500, the balance that might be need to pay tax in assessment year via self-assessment tax. So technically we can say that self-assessment tax is the tax which we need to pay tax in assessment year always. But that is not the only way of collection of tax. The collection could be either by TDS mode, TCS mode, advanced tax, etc. So why these kind of collection has been enforced? When the charging section says that the income of previous year is going to be assessed in next year, that is called assessment year. So they are saying technically that income tax need to be assessed. We are going to check the income tax liability next year, but that does not mean that we are going to collect the tax in the next year. So there are some process in which that tax might be or a part of that tax need to be collected in the same previous year. So you might be feeling that this is cheating, this is wrong, this is why this is happening. If we are going to pay tax in next year, then why government is asking us to pay tax in the same year? Why this process is there? So let me remind you one more feature of income tax, what we have discussed in the basic concept. In the basic concept, I have told you why income tax in India, why government need income tax or why government need any tax. Why? What is the basic concept? The concept was like that. I have told you that our nation is like a big society. As you are living in a colony, in a society, etc. So they generally charge collection charges for infrastructure, for your safety, for electricity supply, etc. So we usually pay 2,000 per month, 5,000 per month, etc. So the society or the colony is collecting tax, is collecting charges for providing you the facility, etc. So how it is possible to provide you that facility without the collection? In the same way, income tax collect tax because our nation is a kind of a big or bigger society. So for the infrastructure of country, for the infrastructure of roads, etc., for the basic necessity, for medical, for educational, for safety, security reason, government need money. So that's why government charge tax. Now there's a problem. If you will ask government as per the income tax basic concept, okay, I will pay tax next year as per the provision because income of previous year is going to be taxed next year. So I will pay the whole money of tax in next year. So how they will run country for the whole 1 year? How it is possible? For this 1 year, they need, of course, society collection charges are generally taken up at the advance. In the same way, because we need to pay tax in next year, but government needs that inflow of funds for running this year also, for providing you the facility in first year also. So that's why these collection process is there. So technically these collection are, if we can say in a layman language, that is an advanced collection of tax. What you are going to pay next year, government is asking you to pay some amount or full amount in certain cases in the same year. So we can run the society, we can run the country. Suppose if you are become a chartered accountant and if definitely you are going to become a chartered accountant and you went to a job in another city. And the employer say your salary package will be 12 lakh rupees, 1 lakh rupees per month. So your package is 12 lakh rupees. So you moved on into another city and the employer is saying we will pay you 12 lakh rupees after the end of the year. Work for 1 year and then we will pay you the salary. So your salary is 12 lakh, but how you will survive for this 1 year? Suppose you do not have any other fund, you do not have any financial support from any other side, and the employer say we will pay you this 12 lakh rupees. It's your money. Do not worry. It's your salary package. We will pay you after 1 year the whole 12 lakh rupees at once. So how you will survive for 1 year? Either you need to take the loan, borrowing, etc. And suppose if there is no borrowing, no loans, etc. And if you take that loan, the extra burden of interest you need to pay. So what will happen? The employer pay you 1 lakh rupees per month. So you will survive every month. So the basic concept of collection of tax is almost like this, that you need to pay tax in advance to the government so the government can run this nation. So some collection process has been specified by the income tax department, the TDS, the TCS, the advance tax. The balance you need to pay in the assessment year, that will be called self-assessment tax. So this was layman. I'm just trying to make you understand that why these processes are there. Because if I'll not teach you this thing, that why government is asking, because they need to run the nation. If I'll not teach you this thing, then might be your brain will ask you this question, why this collection process is here? We are going to pay tax in next year. So why government is asking us to pay tax right now? Because they need money. They need inflow of cash to run this country for the whole year. So they need money. They need the tax in the same year. Now, how this TDS process works, we will understand the process of this TDS first, then we will understand why advance tax is there, what is the process of this, and why TCS is there. So first of all, we are going to discuss the provisions of TDS. So let me make you understand how TDS will work. So TDS is going to be deducted on some specified income. There is a list of some specified incomes or cases. There are some withdrawal cases also, but generally TDS is applicable on some specified source of income. The full name is, of course, tax deducted at source. Source means income source. Clear? So what will happen? How this process work? The process will work like this. Suppose there is a payer and there is a paid. Suppose Mr. A is the payer, Mr. B is the paid. Mr. Payer is making a payment to Mr. B, suppose rupees 1 lakh rupees as a commission. And now commission has been included in these specified income categories. Clear? So TDS provision has been applicable on this commission income. And the rate has been decided, suppose 5%. So what will happen? How this TDS process work? So because commission has been included in the TDS specified income definition, the rate has been specified 5%. So now how this process will work? Now when Mr. A will pay commission to Mr. B, he will deduct 5% TDS on behalf of Mr. B name. So this is the tax of Mr. B, who is going to be deducted by the payer, that is Mr. A. So 5,000 is going to be deducted out of this income by Mr. A on behalf of Mr. B tax. Understand? The tax of Mr. B, but need to be deducted by the payer always. Clear? So now how much amount of money will Mr. B get? He will get 95,000 rupees. Clear? 5,000 will be deducted from on the name of TDS from his income, and balance 95,000 going to be received by Mr. B. Now how this process will work in future? If 95,000 has been received by Mr. B, what will be his income to be included in his income? in the next assessment year, what will be included as income in the head of his source of income, that would be full 1 lakh rupees. It would not be 95,000 because the income need to be gross total income. Gross total income means income need to be included grossed. If any tax has been deducted, that is included in the part of income because you are going to get the benefit of this value. So 1 lakh rupees was the income, 5,000 has been deducted, but still the income would be remain 1 lakh rupees. So the part of this income which is going to be included in the hand of Mr. B would be 1 lakh rupees. Suppose he has no other income. So this would be his gross total income, again 1 lakh rupees. Suppose there is no deduction or we are under default tax regime, so no deduction has been claimed. So this is his total income. So tax would be nil. Up to 2.5 lakh or 3 lakh, there would be no tax. So now what this 5,000 process is going to be there, this 5,000 which has been deducted by Mr. A on behalf of Mr. B is going to be deposited with income tax department in the form of TDS of whom TDS it would be, A or B, what name we will use. Bhumika is saying, A, Lahari is saying, TDS of whom, A or B. A is just going to deposit it to the government, but whose tax is generally it is? Of course, it has been deducted from the income of Mr. B. So this TDS will be called the tax of Mr. B or the TDS of Mr. B. The PAN number of Mr. B, PAN number you understand, permanent account number, PAN number of Mr. B would be there. So it would be represent that Mr. B had paid 5,000 income tax in advance in the form of TDS. So TDS, TCS or advance tax is not different. They all are like part of income tax. They are nothing different. Self-assessment tax, TDS, TCS, advance tax. They all are part of income tax. They are just the different collection process. So in the income tax department, there would be a deposit of tax on behalf of Mr. B, 5,000 rupees. So now what will happen? Now the real income of Mr. B is just 1 lakh rupees and there is no other income. So tax would be nil. Now this person tax liability would be nil, but he already paid 5,000 in the form of TDS. So whatever TDS has been deducted from your income is going to be your tax payment by you at the time of filing of return. So Mr. B need to file his income tax return. He will show his income is only 1 lakh, GTI is 1 lakh, deduction nil, TI is 1 lakh. And if tax is nil, then he has already paid tax of 5,000, which is wrong because his tax liability should be nil. But income tax received 5,000 on behalf of tax, but his real tax would be 1 lakh rupees. This will come to an assessment year. This tax need to be deducted and deposited to the government in previous year. So we deduct the tax of Mr. B of 5,000 rupees, but his tax liability would be 0. So income tax received the tax of Mr. B 5,000, which would be 0. So this 5,000 will be your refund. And income tax will return this tax to you because your tax liability was less than this value. Suppose this other case might be like this. He is having this income 1 lakh rupees. Suppose he is having other income also 9 lakh rupees. Commission and other income. His GTI suppose now 10 lakh rupees. His TI suppose again 10 lakh rupees. So now his tax, suppose including education, cess, etc. Suppose it's 1,13,000. So 5,000 tax he has been paid already, and that tax is with income tax department. So now remaining he need to pay tax of 1,08,000 only. So whatever tax has been deducted in the name of TDS or TCS or advance tax, that is going to be reduced from your tax liability at the time of filing of your return of income in the assessment year. So let me tell you again, let me clarify you again the TDS, the TCS, the Advanced Act, there is nothing. They are all equivalent to like income tax, but it has been collected in the previous year. Why we need to pay it to government in previous year? I have explained you the logic behind it, because government needs the tax revenue for running this country. So the real tax liability would be decided in the assessment year always. And if your TDS, etc., anything has been paid, that is going to reduce your final tax liability also. So if you are thinking why we need to pay tax in this previous year when we are going to pay tax in next assessment year, so this is because government needs collection of tax. So even suppose if tax has been equal, suppose the final tax liability also 5,000. Suppose your income is like that your final tax liability is 5,000. So TDS already paid 5,000, that would be nil. So there could be only three cases. Either there could be a refund, there could be tax liability, or there could be nil. So whatever TDS, TCS advance tax you have been paid, that is going to reduce your final tax liability in the assessment year. I hope it is clear. You might understand what is the basic concept of TDS. Now, one more important thing regarding this chapter and what it is, in other chapters like PGVP, like capital gain, like residential status, like income from other source, etc. Right? So I have prepared a diagram also, and I have provided you the chart presentation regarding the calculation of tax or other topic we have discussed, like residential status, ROR, NOR, etc. Because they have these chapter having interconnected provision, like this a gift provisions of income from other source. So I have prepared a diagram for it, monetary, non-monetary. For capital gain, I have provided you the diagram for cost of acquisition, how to calculate cost of acquisition, the tax rate, etc., etc. For residential also, I have provided you the diagram. Because that is single chapter which consisting different provision, those are interconnected. So we can present these kind of provision with the help of a chart or a diagram. But TDS comprises multiple provisions. There are multiple income on which you need to pay tax with different rates, with different provision, and generally they are not interconnected, except section 194Q, which is connected with TCS provision, etc. Right? Baki other provisions do not have direct link with the other TDS concept. So almost 25 different provisions of TDS are there, 20 to 25. And they do not have any interconnected connection. They have separate provision. So we cannot make diagram for these kind of provision, but let me tell you how to remember these provisions. It's a very important trick. You should try this thing. In this case, if any chapter is having different kind of multiple provision, those are not interconnected. So for this purpose, because this is not easy to remember all the provision at the time of examination. So for this purpose, please make short notes. And you have to do it yourself. One more chapter it was like this. You must have completed it, I guess, the day before yesterday or on Friday. That is deductions. Under section 80C to 80U. Even they are not majorly interconnected, separate deduction, separate provision. So we cannot make diagram for these kind of chapter because that is not relevant, because not interconnected. So for deduction purpose also, like in deduction cases, you must have seen, you need to remember the amount of deduction, the applicability, who is the assessee who can claim that. So there are 4 or 5 main points in every deduction. So you can make short note of every deduction, and in that you have to write it down, who is the assessee who can claim that particular deduction, what is the amount of deduction that could be claimed, what are the applicability, when deduction can be claimed, or some other important, any clarification, any special exemption in special circumstances like that. So for deduction chapter also, if it is bothering you that how I am going to learn all these deductions, they are multiple deduction, you have to make short notes. So at the time of revision, those are definitely going to help you. In the same case, in case of TDS, I am going to teach you the provision, but you have to make the short notes. In the case of TDS also, the main points we need to learn like who will be the payer, who is going to be the payee, the amount, the limit, the rate, and the applicability, and any other special provision, a special we can say exemption, etc., if any applicable. So you have to make short note of all TDS provision that is going to help you in the examination. Understood? How we need to learn this chapter? What is the basic concept of TDS, TCS, advanced tax? We have gone through with these provision. And these provisions are so beautifully, wonderfully drafted in the study material that I have not prepared the notes, my notes for this chapter, because every section is different and it is so much provision in these topic that we cannot make the specific notes separately. So study material is very beautifully drafted with all the provision, example, illustration. So we are going to discuss this chapter with the study material provisions one by one. Okay. So Preeti Kumari is saying, yes, sir, I am ready with paper and pen already for short notes. No, Preeti Kumari, you have to make short notes after the class yourself. I am going to discuss the provision. I am going to tell that what are the important point in this provision also that I'm going to mark in the study material. And after the class, you can make your short notes as accordingly, whatever point you think that are important. And once you will write those provision, so writing is like 5 times better than learning any provision. We all know that. Okay. So we not need to make the short notes right now. Just need to understand the provision. And from that provision, you have to make short notes in these category: payer, payee, amount, limit, rate, and any other special points. Okay. The Sai Kumar is saying, for TDS, one more purpose is those who are making it as expense. For other person, it is income. Once the person who is making payment deduct TDS, the other person cannot avoid that income and he has to show the same as income without omission. That is the process. But the main process of the government was, the main object was to collection of tax earlier. Otherwise, government need to wait for 1 year. If I'm earning some income of 10 lakh rupees today, and if this provision is not there, so I am going to pay if I'm earning any income in, suppose, April 2024, 10 lakh rupees, and no TDS, no advance tax, no TCS provision is there. So I am going to pay tax on this 10 lakh rupees in assessment year. So April 2024 income tax I am going to pay in July 2025. That is the filing of return date. So almost 1.5 year later, 1.5 year, government will receive the tax of it. So by applying this provision, government receiving the tax almost 1 year before the collection, which is going to be there if this provision would not be there. Okay. So the basic idea is to collection of tax earlier. Different specified income, Larry is asking, having a specified percentage of TDS. Yes, of course. Different incomes having different kind of amount specification, different kind of rate, etc. That's why short notes are really, really helpful in this case. And a very interesting thing, in the study material itself, the institute has made the short notes of a majority of TDS provision. So in the same format, for those provisions, short notes are not there in the study material. You can make the short notes on the basis of those points which has been made for some provision in the study material. I will show you the format in the study material and you can follow that format for the purpose of your short notes. Specific limit also there, Larry. Just have patience, have patience. I will teach each and everything. That was the introduction part, what we just discussed, that what is exactly the TDS is there. TDS, health and education cess is not applicable. Everything is going to be discussed, Kasak. Just wait. Just wait. We will discuss each and everything one by one. Okay. Sure. Now we'll start with our course as usual, the thought for the day. And that is for today. Hard work beats talent when talent does not work hard. So a very deep explanation of this quotation you can see, and if you'll understand the meaning of this quotation, that will be really, really great. That you could be a talented person, but if you're not going to work hard, that is going to be waste. But if you're an average person, if you are a below average person also, and if you're going to work hard, you can beat a talented person who is not going to work hard. So a very, very interesting thought for the day for all of you. Let's move on to the provision of TDS. So we are going to discuss three tax collection process in this topic. That is, first one is TDS. We will discuss what is TDS, how TDS works, how to pay tax deducted collected at source. The process is also there, that how we are going to collect the TDS, how we are going to deposit it with the income tax department, what is the penalties, what are the interest if we are not going to deduct or collect it, and how to avoid or save TDX. So how to avoid or save TDX are the exemptions are there. So what are the exemption? If we pay with the help of these exemption, we can avoid the TDS deduction, etc. Then we have the provisions of TCS, tax collected at source. That is also we are going to discuss in later in this chapter. And the advanced tax is also there. What is advanced tax? How to calculate it? What are the due dates to pay advanced tax, etc. Technically, advanced tax, TDS and TCS all having the same object, that to collect the tax earlier in the previous year. But every these collection having separate kind of purpose, separate kind of provision, separate kind of applicability, that we will understand one by one. So what is the applicability of TDS? The TDS is applicable on specified source of income. So those source of income has been specified in TDS provision. One by one we are going to discuss, and you can see the study material has been already says that the collection on the basis of these three types of collection, the total income of an assessee for the previous years is taxable in the relevant assessment year. So that was the charging section. But section 190 says there are collection process we have defined for the collection of that tax which is going to be assessed in next year. For example, the total income of the previous year is taxable in the assessment year 25-26. But however, income tax is recovered or collected from the assessee in the previous year itself through TDS, TCS, advanced tax. Another mode of recovery of tax is from the employer through tax paid by him under section 192(1)(a) on the non-monetary perquisite provided to the employee. So you must have gone through with the provisions of these perquisite under salary head. So if employer takes the liability of paying tax on any perquisite, an employee need not to pay tax on those perquisite. In that situation, the tax of that perquisite need to be deposited by the employer also. So generally the rule is this, that payer deduct TDS from the income of pay and deposit it to the income tax department. But in case of section 192(1)(a), in which employers say that I am going to pay these perquisite to my employee, and whatever tax liability will arise on these perquisite, I will not deduct from the income of employee. I will pay the tax of these perquisite by myself. So that is section 192(1)(a). So these kind of perquisites are exempted in the hands of employee. Why these perquisites are exempted in the hands of employee? Those fall under section 192(1)(a). Exempted in the hands of employee. Why? Because tax already been paid by employer. So these are exempted. Why? Because tax has been paid by employer. Employee need not to pay any tax. And this provision also having implication in PGBP head. Tax paid on those perquisite under section 192(1)(a). So if any tax paid by employer himself on these kind of perquisite, then a provision is also under PGBP head. What is that provision? Who will tell me? चलो देखते हैं किसको याद है. Hardik is saying correct, absolutely right. So any expenses made by employer on behalf of employee can be allowed as deduction under PGBP. But if any tax has been paid under those perquisite which is exempted in the hands of employee, the tax paid on those perquisite cannot be allowed as a deduction. Correct, absolutely right. So you can see that perquisite provision having three implications. Salary had also, PGBP had also, and now under TDS also. Fine. We have the example also regarding this. So these tax are deductible, and of course, whatever tax, whether it's TDS, TCS, advanced tax, whatever tax has been paid by you, you can claim the deduction of these tax. So whenever you will assess your income in the assessment year, so what would be your tax liability? I've explained you with the help of an example. You can deduct the TDS paid, the TCS paid, the advanced tax paid, the AMT credit, etc. Everything. You can deduct it from your tax liability. So it might result in refund also. So the provision explains these taxes are deductible from the total tax due from the assessee. The assessee, while filing his return of income, has to pay self-assessment tax. What is self-assessment tax under section 148? Even after paying TDS, TCS or advanced tax, if any tax has been balanced, need to pay, the tax need to be paid via self-assessment tax. If tax is due on total income as per his return of income after adjusting inter alia, TDS, TCS, relief, under section 89, tax credit under section 15 JD. That is AMT credit. What is AMT? That is going to be discussed in chapter number 9, calculation of total income and tax liability. In case assessee exercise the option of shifting out of the default regime, etc. Now, direct payment of section 191. Section 191 provide that in the following cases, tax is payable by assessee directly. First is, in the case of income in respect of which TDS is not required to be deducted at source. So if there are income on which TDS is not required to be deducted, then assessee can pay the tax at the time of filing of return of income. If no TDS, no TCS required. And if income on which TDS is required, then TDS, if not actually deducted, then we can pay the tax by ourselves. In order to overcome this difficulty, the explanation to this section provides that if any person, including the principal officer of a company, who is required to deduct the tax at source, and an employer paying tax on non-monetary perquisite. So if the payer who needs to deduct the TDS, suppose we are paying something to the pay, so the liability to pay TDS from after deducting from this income, suppose 1 lakh was the payment and 10% was the TDS. So this payer need to deduct this 10,000 and deposit to the government department. And if he fails to do, then he will be treated as assessee in default. So if TDS provision is applicable on payer, then that is his liability to deduct the tax and deposit it to the income tax department. If he does not do so, then he will be called assessee in default. And in the same case, if the employer provides any kind of perquisite, tax-free perquisite to the employee, then the tax of those perquisite need to be deposited by the employer himself. If he fails to do so, he will be called assessee in default. Now the section started one by one. Those income on which TDS need to be deducted. The first one is salary. So when you are going to prepare your short note, then it would be start from this section 192. So the first point would be the applicability. So you can write the first point in your short note whenever you will start doing this. Serial number 1, salary. Section 192. So you will remember this section and which income fall for the deduction of TDS under section 192. It would be really good if you are able to learn these sections of TDS. So if in the examination they'll ask you kindly describe the provision for deduction on salary, and we start that deduction of salary TDS provision fall under section 192, it would be really great. So I recommended you that please try to learn sections of TDS. So now applicability of TDS under section 192, very simple provision. Let me explain you with the help of a small presentation. So salary is going to be paid monthly. In the same way, TDS of salary is going to be deducted monthly. When it's going to be deducted, suppose here's an employer and he's an employee. So from 1st April 2024, if employer appoint employee, he can make an estimate regarding his estimated income and his estimated tax liability on the basis of information what we have on this date. So suppose the estimated salary of this person is suppose 10 lakh rupees employee, and no other income is there. So the tax would be suppose 1,12,500 under optional tax regime if no deduction etc. And suppose the cess has been included 4%. In case of salary, for the purpose of deduction of TDS, cess is going to be included, cess, surcharge, etc. So what would be here? The amount would be 1,17,000. So this is the estimated tax what he needs to pay by the end of this year. So how much TDS we need to deduct it from his income? So monthly TDS would be like this. $9,750. His salary was 10 lakh rupees for the year. So technically, monthly salary somewhere around 8,334. So the TDS would be now 9,750. Every month need to be deducted from his salary. So the balance salary which is going to be credited in his account would be 73,583. So the process will run like exactly the way the tax need to be calculated, but the information would be estimated. We are supposing that his income would be 10 lakh rupees for the whole year. It could be changed, of course, if in the mid of the year salary could be increased. Any other income he has earned like dividend, etc., and he has informed you. So it could be reduced. So technically, this calculation would be exactly same as the calculation of normal tax, but the base would be almost estimated calculation of income and the estimated calculation of tax. This could be revised if during the previous year there is any updated information regarding any other income or the increment in the salary, then this could be revised and the deduction could be up or down depending upon the fact of the cases. Now, this provision has been specifically mentioned over here. Such income tax has to be calculated at the average rate of income tax computed on the basis of the rates in force for the relevant financial year in which the payment is made. We have to calculate the average rate tax also in this case. If on any perquisite we need to pay tax, so average rate of tax should be there also. How it would be? How we need to calculate the average rate of tax? If in this case, I would ask you to calculate the average rate of tax. Why we need this average rate of tax, that you will understand in the next example. If I'll ask you to calculate average rate of tax in this scenario, the formula would be total tax upon total income into 100. So in the above example, total tax would be 1,17,000. Income was 10 lakh. So that would be my average rate of tax. It could be used For the purpose of taxability of those exempted perquisite which has been provided by the employer on which employer is ready to pay the tax. So in case of those specified perquisite, we need to calculate the TDS on the basis of average rate of tax. How it is going to be calculated has been explained in the next example. So minimum deduction of tax, you have to calculate the average rate of income tax. The average rate of income tax means the tax rate arrived again by upon the total tax upon the total income. A deductor being an employer has to seek information from each of its employee. Employer will ask the employee that this is your salary payment. If you have any other income, then kindly inform me. I will add those income in this estimation and will find out your final TDS or tax liability. If intimation is not made by employer, it would be presumed that the employee continue to be in the default tax regime. So default tax regime would be applicable for all employees. If any employee want to switch out of this regime, that he has to inform the employer. If no information has been received, that it would be assumed that you need to continue under default tax regime and TDS will be calculated accordingly. Again, point number 4 is explaining the tax or TDS upon those non-monetary perquisite. So the concept of payment of tax on non-monetary perquisite has been provided in section 192(1)(a) and B. These sections provide the employer may pay this tax at his option in lieu of deduction of tax at source from the salary payment. So if he takes the responsibility to pay tax on these perquisite, then that would not be included as a TDS deduction from the employee's salary. How it will be done? Here is a separate solution for this, a very good question. Mr. A, the employer pays gross salary including allowances and monetary perquisite 7,30,000. Non-monetary perquisite is 1,20,000. The general manager is exercising the option to shift out of the default tax regime. So he needs to pay tax as per optional tax regime. So you need to explain the provision of TDS in this case. So the gross salary including monetary is 730, non-monetary perquisite is 120, 8,50,000 would be your gross salary, deduction is 50, net is 8 lakh rupees. On this 8 lakh rupees, the tax liability after cess, the tax surcharge, which would not applicable in this case, plus cess, that would be 75,400. Average rate of tax upon total income in 200. So technically the tax average rate in this case 9.425%. Why we need to calculate this rate? For the purpose of taxability of those exempted perquisite. Now we are having two options, Mr. A, that means employer. If employer does not want to pay tax on these non-monetary perquisite by himself, employer say, no, I will not pay the tax. So in that case, your tax is 75,400, that would be your TDS. And upon 12, so per month TDS would be this value. What will arrive after dividing this 75,400 by 12. Alternatively, if employers say that I am going to pay tax on non-monetary perquisite, then how much would be the TDS liability in the hands of employee? Then the average rate of tax will come into the picture. And the 9.25% of 120 was the non-monetary perquisite value, would be 11,310. This need to be paid by employer himself on behalf of employee tax. So now the TDS liability of the employee would be 64090 divided by 12. So that would be per month TDS liability in the hands of employee. I hope it's clear. Very simple. Other provisions are just for reading. You can go through it. For the purpose of calculation of TDS on salary, you will take the salary income plus any other income which has been reported by the employee to you that I am going to have some capital gain income or rental income, etc. But the loss of only house property can be deducted. No other loss is allowed to be deducted for calculation of tax regarding TDS. Only loss under the head house property can be deducted. That is also under only optional tax regime, because the default tax regime does not allow the set off of house property losses under any other head of income. So under default tax regime, you cannot do this, but under optional tax regime, you can claim the loss of house property. Earlier, there was a provision that for the calculation of TDS, you can deduct the TDS of other income also. Suppose in this example, suppose that TDS or tax liability of assessee was 75,400. Clear? Suppose the question says that employee has already paid TDS on some income 10,000. So if any other TDS has been deducted, then you will reduce that TDS for the calculation of the TDS liability. So now the TDS liability would be like this. If any other TDS has been paid by employee or that assessee. So earlier there was only TDS option need to be deducted if any paid by him on any other income. But the amendment now says that if any TCS has already been paid by employee. Earlier it was only TDS, now TCS also inserted. Suppose in the question it says he also paid TCS of 5,000. So now for the purpose of reduction of TDS, the liability would be only 60,400 divided by 12 out of his salary income. So this is the amendment made by department. You can see, to avoid the cash flow issue for employees, the scope of section 192(1)(b) has been extended to include any tax deducted or collected at source, TDS, TCS, to be taken into account for the purpose of making the deduction under section 192. Accordingly, with effect from 1st October 24, an employee can inform his employer for a financial year that details of following. Up to 30th September, only TDS deduction was allowed, but from 1st October 24, now any other income not being a loss under any such head, any collected, you can take the benefit of it. Loss is only allowed in case of house property. No other loss was allowed. So we can say for the purpose of calculation of TDS in case of salary income, you can take the benefit of TDS, TCS, and only one loss, that is income from house property. Even this loss is allowed only when you are shifting out of the default tax regime. So that was the salary provision, how to calculate the TDS on it. You can go through with the provisions of point number 3. They are very simple, that every information need to be on estimated basis. That was salary calculation of TDS. So what I am asking you to read yourself. If you have any problem in that, you can ask me. I will solve it. I will give you the answer in the next session. We are skipping those provisions. Those are only for procedural part or just for reading purpose, because we have to cover all the TDS sections, almost 20 to 25 sections of TDS, and I guess more than that. Then advanced tax also, and then TCS also. And we have to cover the MCQs also and the test your knowledge question also. So just need to cover the points. Those are very, very important and the basic point of these concepts. Now, next section, and you will see the TDS on salary was the vast topic. And I guess I can say this is the only section which is having the most detailed solution, because you have to calculate the complete GTI, TDI, etc., TI, etc., and then you need to calculate the tax for the purpose of TDS. Any other sections, what we are going to discuss after this, is only having a specific percentage of rate, and you have to just apply that percentage of TDS to find out the deduction of TDS in that specific section. So any other section after this is technically very simple in comparison to the calculation of section 192. Now, interest on security. So you are, if dealing in any kind of securities, bonds, debenture, etc., So on those security on which we can earn interest. So whether shares would be included in these securities or not. Shares would be included in section 193 or not. Are shares not securities? Of course they are securities. But on those securities, we do not earn interest. We earn dividend. Correct, Hardik? Absolutely correct. Very nice. So those are definitely covered in the definition of security, but section 193 says those security on which what we earn interest, not dividend. For the purpose of shares dividend, there is section 194 that is going to be discussed later. So security includes shares, but not section 193. Well done. So person responsible for deduction of tax at source. It's a universal rule. Only payer is going to deduct the tax in case of TDS. And payer is the person who is liable for deduction of tax. And it says this section casts responsibility on every person who pay interest on security. Simple. So if you are starting for a short note, so the payer, any person who's paying interest, of course. So that would be the point one of your short notes in case of section 193, interest on security. Meaning of interest on security, basic provision, interest of security means any kind of interest on government security or any other security of a company, etc. Now you can see, very simple to find out the TDS liability. There is no calculation required of GTI, TI, etc. The rate is fixed 10%. So if I am a person who is a payer, suppose I am a company and I am paying interest on security, then whatever amount I am paying, the rate of tax is 10% right now. Till now, the rate is 10%. So such person is vested with the responsibility to deduct the income tax. So second point in my short note would be rate of TDS 10%. Clear? How you need to prepare the format that is already given in the study material for other sections. So you can copy the same format for it. Now, time of tax deduction at source, in 90% cases, the same paragraph has been repeated. Whether at the time of payment or at the time of credit. Whether you are going to pass an entry on accrual basis or payment basis, whichever is earlier. So if I am a company and if I am creating the interest amount in your books of accounts, in my books of accounts, entry has been passed by me and I am just trying to credit that interest in your favor. So at the time of that entry, I need to deduct the TDS. Or if the payment is before the entry, then also. So whichever is earlier. Generally, the credit part would be earlier in the case of credit or payment, whichever is earlier. But the provision has been made like this. You can learn these provision like this: credit of interest or payment of interest. In majority of cases, in 90% case of TDS, this concept is same, whichever is earlier. So this is the time of tax deduction. Clear? You can read this provision. That credit of interest account name could be interest payable account, suspense account, whatever it is. So in whatever account you credit this interest, the TDS need to be deducted. Non-applicabilities of TDS under section 193. So it says there are some interest on which TDS need not to be deducted. So we can say these are exemptions, or we can say these are non-applicability cases. So in following cases, if this interest has been fall under the point number 5 cases, then there is no requirement of TDS deduction from any interest payable on national development bonds. So these are the bonds on which government has made them TDS free. So if interest has been earned by me on national development bonds, then the payer will not deduct any TDS. I will get the whole amount of interest without any deduction on the basis of TDS. So you need to just read those bonds. 7-year national savings certificates, any debenture authority of a cooperative society notified by government, This is important point. On any security of the central government or state government. So if any security issued by central or state government on which I am collecting the interest, then there would be no TDS deductions. But there are three exceptions. If that is 8% taxable bond, it may be noted that tax has to be deducted. So if it is 8% saving taxable bonds 2003, then TDS need to be deducted on the interest. If these are 7.7 interest taxable bonds 2018, then TDS need to be deducted. One more specific bond has been included for the purpose of TDS deduction, that is floating rate saving bonds 2020. Any other government security except these three, the TDS requirement is not there if the interest amount is not exceeding 10,000 rupees. So on any government security, whether it's state government or central government, no TDS if that is up to 10,000. So TDS is required to be deducted on these three securities. And when interest exceeding 10,000 in financial year. So if interest does not exceed 10,000 in financial year, then TDS is not required to be deducted in these securities. Clear? So any other government security except these three, there is no requirement of TDS deduction on these three security. TDS required to be deducted if interest exceeding 10,000 rupees in the financial year. Clear? On any debentures issued by the company in which the public are substantially interested to a resident individual or HUF, however, so if any company in which the public are substantially interested, and if that is going to pay the interest to a resident individual or HUF, this is also an important point, then TDS is not required to be deducted if interest is not exceeding 5,000. So if interest exceeding 5,000 in this case, then TDS is going to be deducted. So in case of all government securities, no TDS except in these three cases. In these three cases, TDS would be there if it is exceeding 10,000 rupees. In case of interest has been paid by any company in which public are substantially interested to a resident individual HUF, then TDS need to be deducted if the interest value exceeded 5,000 rupees in the financial year. If it is not exceeding 5,000 rupees, then there would be no TDS. On any security of interest of LIC, GIC, subsidiary or GIC or any insurance provided, there would not be any TDS required. That was section 193. So the third short note, look, we have discussed the pair. We have discussed the amount limit, the rate, that is 10%. Now you need to remember the percentage. It says in case of government, state or central government, if these are three securities as we discussed, the limit of TDS deduction was if exceeding 10,000. If it is a company in which public are substantially interested paying interest to an individual or HUF resident, then TDS if the interest value is exceeding 5,000. Clear? The exemption you need to. So short note should be short. It should not be in detail. So out of these provision, you can make a short note in 4 or 5 lines regarding the main provisions of this section 193. So this is the only way you can learn all those provisions. And in the examination also, you can see that we have to deduct. Manoj is asking TDS directly 10% on 10,000 or 5,000. If the limit exceed, then you have to deduct TDS on the full value. Suppose the interest is 11,000. In the case of this 10,000 value, suppose the interest is 11,000, then 10%. TDS would be 1100 rupees. If this is 6,000, in case of this 5,000 value, suppose the interest is 6,000, then 10%, that means 600 would be your TDS value. Clear? Now section 194A, you can see section 194 is not there, which is for dividend in case of shares and security. So there are some missing section, and those section has been included in that format, which is prepared in the study material also. So section 194 will come later in this chapter only. So now section 194A, and it says interest other than interest on security. So for which kind of interest now it is talking? We have discussed the provisions of interest on security, and now it says section 194 is applicable on interest, but it should not be the interest on security. It would be interest other than interest on security. So which kind of interest it is talking? It's talking about like interest on saving bank account, interest on FDRs, interest on loan, etc. So any other interest except interest on security, TDS is going to be applicable as per the provision of section 194A. So the first point for the short note would be the interest other than interest on security. And for the purpose of your knowledge, you can include there that saving bank account interest, FDR interest, loan interest, etc. So you will understand the concept in point number 1 of applicability in your short note. Applicability of TDS under section 194A. Now you can see a very special provision is coming over there. Now who could be the payer? Who can deduct the TDS? And it says payer for section 194A would be, it says any person except individual HUF. Let me show you with the help of detailed diagram. Like there are some sections in which all pairs does not include. All pairs not included. Like section 194A says for interest other than interest on security, who can deduct TDS? So it say any person can deduct TDS. So when it say any person, that means individual, HUF, AOP, BOI, partnership, firm, company, etc. But there are one exception. It says any person can deduct TDS under section 194A except individual and HUF. So if any individual or HUF is paying interest to anyone, they cannot deduct the TDS of the other person. But not all individual and HUF has been excluded. It says individual HUF except, but individual and HUF whose turnover exceeding 1 crore in case of business or exceeding 50 lakh in case of profession in preceding previous year. So we are finding out the TDS applicability for our previous year, that is 24-25. But for the purpose of applicability of this pair, we have to find out the turnover of that individual or HUF, as the case may be, in preceding previous year. That means for previous year 23-24. So if this individual and HUF, if the individual HUF turnover exceed 1 crore in case of business and 50 lakh in case of profession, then he can deduct TDS under section 194A. And if his turnover was not exceeding 1 crore or not exceeding 50 lakh rupees, if he is in a profession in the preceding years 23-24, then section 194A cannot apply on this pair. So any person include every person, but those individual not covered, or those individual does not fulfill this condition in preceding previous year, they cannot deduct the TDS. Suppose here is Mr. A, who is payer. He is an individual who is paying interest of 1 lakh rupees to Mr. B in the previous year 24-25. Now very interesting thing. Suppose previous year 24-25 turnover of Mr. A was 3 crore. Clear? But we need to know the turnover of Mr. A for previous year 23-24. It was suppose 75 lakh. So for the purpose of TDS applicability, we need to check this year turnover, not the current year turnover is irrelevant, does not matter. And you can see this turnover does not exceed 1 crore. So if the question asks whether Mr. A can deduct TDS on this interest under section 194A, so the answer would be no. In this case, he cannot do so. Suppose if I've changed this question, now suppose there is Mr. C is the payer and he is paying to Mr. D the payment of 2 lakh rupees. Whose turnover we need to check? Mr. C turnover. So Mr. C turnover for previous year 24-25 is suppose 60 lakh. But Mr. C turnover for 23-24 was 1.5 crore. So again, the current year turnover is irrelevant for the purpose of applicability. So now because it's turnover exceeding 1 crore, so section 194A provision is applicable. He can deduct the TDS of Mr. D out of this 2 lakh rupees income. The rate is 10%. So that means 20,000 would be deducted by Mr. C and 1,80,000 need to pay to Mr. D. Now my question is different. Whether this is beneficial for Mr. A or not. Not deducting TDS is beneficial for payer or not. Yes, Preeti, preceding previous year turnover would be given in the question. Previous year turnover is irrelevant. Whether it is given in the question or not does not matter. But preceding previous year turnover would be definitely given in the question. Okay. So, is it beneficial for a person to deduct the TDS, to become a payer who is included for the purpose of deduction of TDS is good or bad? The answer is it is not good, because if you are liable to deduct the TDS, then you have to do a lot of work. Suppose I am Mr. C in this example and I am included under section 194A payer because my turnover was exceeding. So now it's a very headache for me that I need to deduct the TDS of 20,000 from the income of Mr. D. Then I have to deposit this 20,000 to the government within a specified time. If I am delayed, then I have to pay interest to the government. And after paying deposited to the government, I need to file a TDS return also to the department. And if I am not able to file that TDS return, there could be a penalty of 200 rupees per day upon payer. So payer need to do a lot of compliances if he deduct the TDS. Pay does not need to do anything. There is a one loss in the hands of pay that he will not get the amount of TDS right now. He can claim it at the time of filing of ITR, but no other compliances for payee. But if you become a payer, then a lot of headache in your part, because you have to compliance a lot of things. That's why, just because of this purpose, those individual HUF, those do not have turnover of 1 CR. Government say they are small businessmen. They do not have turnover of 1 CR and 50 lakh. So we do not bother them with the TDS compliance provision. So we have exempted that, okay, you don't need to deduct the TDS, because if Mr. A need to deduct the TDS, he need to do a lot of compliances. So that's the benefit for all of you. If your turnover is less than 1 CR or not exceeding 50 lakhs, so that is a good news, because we are outside the purview of compliances provisions. Okay. So section 194A, having special pair and one exclusion, those individual HUF does not having turnover exceeding 1 CR or 50 lakh in the previous year is excluded from this compliances. And let me tell you, this is the same provision under section 194A, same pair, that individual HUF has been excluded. The same definition would be again under section 194C, is exactly the same. 194H, same definition of pair. 194I, having same definition. 194J, having same definition. And 194 are also having the same definition. So all those TDS provision, out of those all provisions, 6 section is having the same kind of pair definition. So you can write these section together, so you will not read to again and again the same provision, except these 6 section. In all other cases, pairs are all pairs generally. There are some other exception also, but generally you can learn that individual HUF having turnover not exceeding 1 CR or 50 lakh has been excluded from these 6 sections. So if in the examination section 194A, C, H, I, J, R is there, and if the pair is that individual, turnover does not exceeding 50 lakh or 1 CR, so you can write it down. TDS applicability, no, not applicability of TDS. Okay, this is for your benefit. Next, we are moving to 194. Who is saying? Okay, back to the provision. So that 50 lakh etc. provision has been discussed over here, and it says this section apply only to interest other than interest on security paid by SSC other than individual HUF. Those turnover does not exceed 1 crore or 50 lakh in the preceding financial year. Time of deduction, I have told you, the same provision will repeat again and again. Earlier, payment or credit, whichever is earlier. Now, in case of interest, like saving bank account interest or the interest on FDR, etc., if deducted by the bank, so bank follow the CBS system of accounting. We all know that core branch system, core banking solution, that is CBS system. So the limit which has been specified in this case is this TDS deduction would be work on the basis of CBS system. How it will work, we will discuss it after point number 3 and 4. The third say about the rate of TDS. The rate is 10%. Clear? For non-corporate resident assessee or domestic company. Whether pay is a resident non-corporate assessee or domestic company, the rate would be remain the same. Now there are exemption of amount. If the pair is a bank, you can see, if the pair is a bank, cooperative society or post office, then up to 40,000 interest if credited or paid by that bank or society or post office. Up to 40,000, there is no TDS. TDS when interest for the financial year exceeding 40,000. Suppose my account in a bank, suppose in the Canara Bank, and the interest for the whole year is not exceeding 40,000. Then in that case, there would not be any TDS applicability. So whether it's a bank, whether it's a cooperative society, or whether it's a post office, there would not be any deduction of TDS if interest is not exceeding 40,000. If the assessee, that means me, if the payee is a senior citizen, person who is having more than or equal to 60 year or resident in India, this limit is up to 50,000. For other than senior citizen, it's 40,000. For senior citizen, it is 50,000. But if payer is other than bank, cooperative society, or post office, if payer is other than these person, then the limit is only 5,000. For example, suppose I am an individual and my preceding previous year turnover is exceeding 1 crore. Clear? My last year turnover is exceeding 1 crore. So I am the payer which is included under section 194A. I have given loan to Mr. B, loan of 1 lakh rupees. Fine. And now, who is the payer in this case? Mr. B is going to be the payer in this case because the person who is going to pay the interest. So I am the lender. Mr. B is the borrower. So from the point of view of borrower, from the point of view of Mr. B, we need to see. Suppose question says Mr. A, individual, turnover exceeding 1 crore in previous year 23-24. He lent 1 lakh rupees to Mr. B at the rate of 11% interest. So in this case, Mr. B is the payer. He is paying 11,000. So this limit is irrelevant from the point of view of pay. Pay need to be just a resident. We need to see this limit from the point of view of payer always. Remember always. So we need to see if he is an individual and now suppose his turnover also exceeding 1 CR. Mr. A turnover is irrelevant. So if Mr. B turnover is exceeding 1 CR in previous year 23-24, the limit would be 5,000 because the payer is other than banking company, society, and a post office. So Mr. B does not fall in a banking company, society, or post office. So 5,000 limit would be applicable. And if it is exceeding 5,000, TDS need to be deducted. Suppose the rate of interest is only 4%. Then interest for the whole year would be only 4,000. There would not be any requirement of deduction of TDS. But in this case, TDS need to be deducted. Clear? Now, the banking company follows the CBS system. Suppose I am earning interest from a branch 10,000 of the same bank, from another branch 11,000, from another branch 20,000. Now individually you can see the interest does not exceed 40,000, but because bank use core banking solution system, so aggregate of interest of all branches of the same person would be checked for the limit of 40,000, and you can see it is 41,000. So TDS need to be deducted in whole value of 41,000. If the branches is not different, if the bank is different, 10,000 interest is from suppose Canara Bank, another account in PNB Bank, and another account in suppose Bank of Baroda. Then TDS would not be deducted because from the separate bank, the amount has not been exceeding 40,000 rupees. Clear? So the provisions of this core banking, which has been explained over here. Now you can understand what is the concept of this core banking. And the important point from this paragraph would be started from this case. You can write it down, read it from over here. In such cases from over there. This is an important point. These banks can pay the interest quarterly or half yearly or yearly. So if on the basis of quarterly, the amount exceeding 40,000, they can deduct the TDS. On the basis of half yearly, if amount exceeding 40,000, they can deduct the TDS. Or if yearly basis the amount has been created, and in this case, that point of time, TDS could be deducted. You can see the limit is 50,000 in case of senior citizen. Clear? The limit will be calculated with reference respect to income created or paid by a branch or banking company or a society or a public company in case of deposit with banking company, time deposit, FDR, etc. The provision has been made for this case. You can go through with the provision. Again, there are some exception in case of this when TDS provision would not be applicable. So non-applicability we were discussing, the first point was not applicability was if it is less than 5,000, in this case, no TDS. If in this case is less than 40,000, no TDS. In case of senior citizen, if it is less than 50,000, then there would also be no TDS. In some other cases, applicability of this section is not there. That is point number B. If interest has been paid by a partner to its firm. If a firm is paying interest to the partner, if the firm is paying interest to its partner, that is under business head, PGBP. That is a kind of appropriation of profit. It's not technically the interest we are talking about. So if a firm paid interest to the partner, TDS provision would not be applicable. In any case, the payment has been made by a society to its member, etc. No TDS provision would be applicable. You can read these provisions. Now, there are some confusing provision in point number E till EF, point number 1 and 2. This is regarding the cooperative society. So if cooperative society paid interest to its member, then the applicability of interest is quite complicated, but it has been stated in detail from this point. So you can skip this paragraph, and the explanation has been in detail in a very simple language has been provided over here. It says a cooperative society referred to in point number E and F. The point number we skipped, that is complicated points. So that has been another provision. It has been simplified over here. It says if a cooperative society referred to in point number E and F is liable to deduct TDS, if so, a cooperative society will deduct the TDS if these both condition has been satisfied. Only in these cases. So you can skip the point number E and F. The explanation in simple language has been over here. If the total sale, gross receipt or turnover of the cooperative society exceeding 50 crores in the preceding previous year, in all sections of TDS, the turnover of current year is irrelevant. Always the preceding previous year turnover need to be checked. So if any cooperative society preceding year turnover is exceeding 50 crore and the amount it is paying as an interest to the member is more than 50,000 in case of citizen and more than 40,000 in case of other case, then only TDS need to be deducted. Both conditions should be satisfied. If only one condition is satisfied, there would not be any deduction of TDS. Whether the interest is paying to its members in respect of deposit, in respect of deposit with other cooperative bank, etc., only TDS will be deducted by a cooperative society if that is fulfilling the condition what we have discussed in the last page. Again, interest income created or paid by the central government under any provision of the Income Tax Act, that is going to be outside the purview of TDS. Interest paid or credited on the following entities, you can go through it. If bank is earning interest, then TDS could not be deducted. If bank is pay, if the bank is pay, financial corporation, they are a pay, then nobody can deduct the interest on the income they are going to pay to the bank. Suppose I have taken the loan from a bank. I have taken a loan from the bank of 50 lakh rupees. Then I am the payer of interest. I am going to pay the interest to the bank. So can I deduct the TDS if my turnover of the preceding year exceeding 1 crore? No. Why? Because if the bank, financial corporation, LIC, if they are paying, then you cannot deduct the TDS. Clear? Next, you can go through this provision also. If you have received the compensation, etc., on the interest of that, even there would be no TDS deduction provisions are there. Any other government can issue notification and exempt any income. Illustration 2. Okay. So examine the TDS implication under section 194A in case mentioned hereunder. On 1st October 2024, Mr. Harish made a 6-month fixed deposit of 10 lakh at 9% per annum with ABC Cooperative Bank. The fixed deposit mature on 31st March 2025. So do TDS need to be deducted? Let me tell you, before giving any answer, you need to check at least 3 points. Is the payer fall in the definition? Is the payee fall in the definition? Is the amount limit of exemption, the amount in somewhere is 40,000, 50,000, 5,000. Is that limit exceeded? If these 3 points you consider before giving the answer, that would be really easy to understand the whole scenario. The rate is maximum case, it's 10%, and many of the cases are similar. And if any other exemption specific case is there. So these 5 points you need to take in, or we can say the 4 points. Rate would be, you should have learned it, but these 4 points you should consider before answering. So in this case, first of all, consider these 4 points, whether it's a payer is includable, pay is includable, is the limit exceeded, and if the answer is no in any of the 3 cases, you need not to proceed further. Let's see what are the answers. Preeti is asking, the interest need to be aggregated from the same bank. An individual amount 40,000 for different bank. Yes, absolutely correct. Because in the same bank, CBS system applicable. So aggregate. If the branch-wise interest is distributed, you need to be aggregated. And if it is exceeding 40,000, TDS need to be deducted. But if you are having interest income from different banks, then each bank amount of interest should exceed 40,000 or 50,000. Pallavi asking, sir, in other case, turnover is not applicable. Yes, in other case, turnover is irrelevant. Any person would include all persons over there. So what would be the answer of first case? The interest value is actually not exceeding the required amount. You can see the provision says on 110, it is exceeding actually 10 lakh 9%. So the year interest would be 90,000. But we have done the deposit on 1st of October. So that means only 6-month interest will accrue. That would be 45,000. So TDS would be there, and the TDS would be at the rate of 10%, 4,500. The first case answer that TDS would be deductible. Clear? Because of on 110, Mr. Harish made a 6 deposit with ABC Cooperative Bank. It's not cooperative society, it's cooperative bank. Okay. Second point. On 1st June 2024, Mr. Ganesh made 3 9-month fixed deposit of 3 lakh each, carrying interest at 9% per annum with Dwarka branch, Janakpuri branch, and Rohini branch of XYZ Bank, a bank which has adopted CBS system. The fixed deposit mature on 28th February 25. So we need to calculate how much interest would be there. 3 lakh carrying interest of 9% in 3 branches. So technically 3 lakh for 9% for 9 months. So technically we are going to receive interest of 20,250 from 1 branch. From 3 branch, that would be 60750 exceeding 40,000. So TDS would be applicable 6075 rupees. Clear? Third one is really interesting. After this example, we will take a short break. On 1st October 2024, Mr. Rajesh started a 6 months recurring deposit of 2 lakh rupees per month at 8% per annum with PQR Bank. The recurring deposit matures on 31st March 2025. So what is the TDS amount? You have to find out with TDS applicable or not. And if yes, what should be the TDS amount? And if not, why it is not applicable? How much? How you calculate, Nitish? How much it is less than 40,000? Okay, Anish is saying 8,000. Hardik is saying less than 40,000. How much it is? I need to know how much it is. If it is less than 40,000, you need to tell me the amount of interest. Nitish Tambeshwari is saying exceeding 5,000. In case of bank, Tambeshwari, it's not 5,000. 40,000 limit would be applicable. Nitish is saying 20,000 into 8% into 9 upon 12. Okay, how much it is? 2 lakh into 8% into 9 divided by 12. According to you, Nitish, is 12,000. No, if you are saying 2 lakh का 8%, 12,000 रुपए interest, that's why you are saying limit would be 40,000 in this case. Pallavi is saying 8,000. Okay. Lari is saying 8,000. Nayan Patil is saying 6,666. Apurv is saying 8,000. All answers are wrong till now. 666 is 8,000, 4,800. All are wrong. You did not able to calculate the correct interest in this case. Interest is less than 40,000, but your calculation is wrong. And suppose if in this case, calculation interest exceeding 40,000, your answer would be wrong. You are not able to calculate the correct interest. First of all, you have to calculate the correct interest. Then you are able to find out the answer of TDS applicability in this case. 9-12 की जगह 6-12 होगा तब भी आंसर गलत है. Till now, there is not even a single correct answer of interest calculation. Sheikh is saying 2 lakh per month. Wrong. I need the interest, the total amount of interest on the basis of which you are deciding. It's not exceeding 40,000. So how much it is? If it is not exceeding 40,000, how much it is? Nayan is saying 33333. No, wrong. Read the question properly. That's the problem with you. क्या लिखा है यहाँ पर? 2 lakh rupees per month invest. So in first month he invests 2 lakh rupees. In the second month he also invests 2 lakh rupees. So for 6 months he invests 2 lakh rupees each month. The correct answer of interest would be 28,000. And it's less than 40,000. That's why interest not going to be deducted. How it would come 28,000? I will let you know. Try to solve it. If you won't able to solve it, I will tell you how that would be 28,000 after the short break. So, Mr. Bhargavji, can we take a short break? Calculate it. आर्यन जी स्टार्ट करें. ओके. Okay, welcome back everyone. I believe that you must have solved this question, and very good. A lot of students has sent me the solution already, and Anshik is solved. Abhishek Mishra has been correctly solved it. Very good. Kasak has been solved it. Hardik also solved it. Nitish also solved it. Abhishek Mishra also solved it. Well done. So very good. So it would be 28,000 like this. Now suppose if you are giving the answer, you might be thinking that the TDS is not applicable. But suppose if you are not, this calculation amount is 48,000. Suppose this calculation amount is 48,000. And you are solving this question as per the answer you have sending me previously. So your answer would be wrong because if it is exceeding 40,000, there would be TDS applicability. So the most important thing is to understand the problem first. I always say read the question properly. And this only one word has changed the whole scenario because it was 2 lakh rupees per month. And we are solving it like taking it the complete uh, investment of the whole year is 2 lakh rupees. So that's why we are giving the answer of like 16,000 or for 6 months answer 8,000, whatever it was. So the correct answer is 28,000. So those who do not know how we calculated it, let me show you. Very simple. Each month investment was 2 lakh rupees. So for the month of October, the interest would be 2 lakh, 8%. And for 6 months, this is going to be invested. So the interest on the first investment till the end of March would be 8,000. Then for the purpose of November month, again, we will take the 2 lakh rupees, 8% till the month of March. The investment would be for 5 months only. So interest would be 6,667. In the same, for December, it would be 4 upon 12. For January, 3 upon 12 multiplied by. For February, it would be 2 upon 12. And for the month of March, 1 upon 12. So the remaining interest would be like 5,333. It would be 4,000. It would be 2,667. And it would be 1,333 sort of. So it would be almost 28,000 because it's less than 40,000. So there would not be any interest on TDS. I hope it's clear. Anil Army is saying, sir, as I have joined late for the session, till now you have covered all TDS provision, not the all provisions. We are still in the process. Okay, so moving on to the other provision. Now, winning from online games, section 194BA, a very simple provisions. If you have earned anything from the online game, that would be your casual income. The TDS rate is very simplified, 30% on the net winning. The person responsible for paying to any person any income by way of winning from online games during the financial year is required to deduct tax 30%. Now you can see there is no person has been excluded, not like individual HUF having less than. So if there is nothing has been specifically excluded and it has been written any person, that means it could be anyone. The turnover, etc. are irrelevant. Clear? 30% on the net winning in a person user account is computed in the prescribed manner. TDS on withdrawal. In case there is withdrawal from user account during financial year, tax would be deducted at the time of such withdrawal on net winning comprised in such withdrawal. Clear? Net winning wholly in kind or partly in cash and partly in kind. It could be possible that the winning could be in monetary or non-monetary form. It does not matter. Department says we need 30% of the value as TDS, where the net winning are wholly in kind or partly in cash and partly in kind. But the part in cash is not sufficient to meet the liability of the deduction of tax in respect of whole of the winning. Then the liability is upon payer. He will collect the amount of TDS by whatsoever reason. So suppose the winning is 20,000 in monetary and 80,000 non-monetary. So total winning is 1 lakh rupees. Now the TDS value would be 30%, that would be 30,000. So 20,000 cash we will deduct from the amount of winning we are going to pay him, and 10,000 need more to be deposited at TDS. Now how payer will collect 10,000? It will depend upon payer. He is liable to deduct the 10,000 extra amount. So he will not release this non-monetary gift until he will receive from the winner the rest 10,000 in monetary form by whatsoever reason or by whatsoever manner. And department needs the amount of payment like that. Online gaming and what the meaning of certain terms in online gaming, who is the intermediary, you can go through with this provision. Who is user, what is user account, general terminology, you can understand what is the meaning of these things. Now there are certain clarification has been issued by the CBDT for this kind of winning, because in case of online winning there are multiple games in which you will earn like 10 rupees, 15 rupees or 25 rupees or 80 rupees, something like that. So if on each winning payer is going to deduct the TDS, so it would be very hectic from the point of view of the payer that he is going to deduct the TDS on 5 rupees winning also, and he needs to deduct those TDS and need to file the return of TDS also. So that would be a very difficult task from the point of view of payer, because in this whole country, multiple players are playing and the winning could be in each day also, or maybe in a day multiple times. So on the basis of that, paying TDS or filing of return for each that nominal amount of winning, that would be really difficult from the point of view of payer. So CBDT had made clarification by relaxing those provisions like this. There are a large number of gamers who play with very insignificant amount, and withdrawal also very small amount, like Dream 11. If you are making a team, so might be you are going to win like 4 rupees, 5 rupees also. Deducting tax at source under section 194BA for each insignificant withdrawal would increase the compliance for tax deductor for the payer, of course. Can there be relaxation to ease compliances? Department says yes, we have the clarification, relaxation benefit for payer. Tax may not be deducted on withdrawal on satisfaction of all the following conditions. That net winning comprised in the amount withdraw does not exceed 100 in a month. So if the net winning is not more than 100 in a month, then there is no TDS requirement. Tax not deducted on account of this concession is deducted at a time when the net winning comprises withdrawal exceed 100. So if the withdrawal exceed 100 rupees, at that time TDS required to be deducted in the whether same month or subsequent month. Or if there is no withdrawal, then at the end of the financial year, TDS need to be deducted. The deductor takes the responsibility of paying the difference if the balance in the user account at the time of tax deduction under section 194BA is not sufficient to discharge the tax liability. And ultimately, the liability is upon payer. That you need to pay us the 30% TDS, howsoever, whatsoever manner. But the relaxation for you is either you can not liable to pay the TDS amount if the winning is not exceeding 100 in a month. Clear? The other clarification you can go through yourself. It's very simple clarification. We have to cover a lot of provision in TDS. So you can go through with this question number 2, question number 3. And definitely you can ask me any query in the next session. If you have any query, if you have any question you have regarding the provision we are discussing. The next is section 194C. It's a very, very important section in my point of view for the purpose of TDS. And I think technically any section in this whole chapter is equally important, because in the examination, there would be like 5 or 6 marks at least will be covered from this chapter. And there would be 2 marks question for section 194C could be there, or either 1 marks questions, 5 or 6 questions from different sections of TDS. So each and every section is very important. Again, I am repeating the same thing. You have to learn who are the payer, who are the payees, the amount exceeding which TDS would be applicable, the rate and the any exemption, etc., any not applicability, any provisions, any clarification which is important. Now, section 194C is applicable when payment to a contractor and subcontract. So, in a contract work, section 194C talks about work contract, not for material. This is for work contract, not for material. If there is a sale purchase of material, then it would be considered as a sale, and there would not be applicability of section 194C. So we are discussing only those cases in which there is a contract for work is there. In case of a contract, there is a payer and there is a payee. Clear? So who will be called contractor and who will be called contractee? So payer would be contractee and pay would be contractor. Clear? The contractor is the person who is getting the payment. Contractee is the person who is paying the payment. So this is called payer and payee in case of contract. And that contract would be for work contract. Whether it's a main contract or it's a part of subcontract. If contractor is an individual HUF, the TDS rate required to be at least 1%. And if it is other than individual HUF, the TDS rate would be 2%. You might remember, in case of payer, I have written section 194A and the second was 194C. So payer should be any person, but if it is an individual HUF, that individual HUF should be that whose turnover or receipt exceeding 1 crore or 50 lakh in the preceding financial year. So only those pair included under section 194C, exactly same as per section 194A. Clear? So that was the basic model of section 194C. It is applicable on work contract. If the contract value exceeding 30,000, any individual contract value exceeding, separate contract value exceeding 30,000, TDS would be deducted. And if individual contract value does not exceed 30,000, but in the aggregate, we paid the same contractor 1 lakh rupees, exceeding 1 lakh rupees in the financial year, TDS need to be deducted. Suppose we have conducted 25,000, 5 contract with the same person. So at the time of first payment of 25,000, there would be no TDS. At the time of second payment, no TDS. At the time of third payment, no TDS because we are now 75,000. On fourth payment, no TDS because up to 1 lakh there is no TDS. But the fifth time of contract payment in the same previous year, the value would be 125 and TDS would be applicable either with 1% or 2% on this whole value. Clear? These are the provision what we are going to discuss under section 194C. So section 194C say the deduction of tax at source from the payment made to a resident. So payee must be a resident only. The payer could be anyone except that individual HUF whose turnover does not exceed 1 CR or 50 lakh. So far, so good. Next is work contract means. Work contract include any kind of work contract. So the definition has been included a lot of things, but you can understand work contract include every kind of work contract in pursuance of a contract between the contractor and the. So contractor is the pay. So they are talking who can be payer, and you can see every payer has been included except that individual HUF, which has been described at this last point. So whether government, firm, all included, but individual HUF will be included only in that case. Individual HUF, AOP, BOI, 4% included. Those turnover does not exceed 1 CR or 50 lakh would not be included. They are included only if the turnover exceeding 1 CR or 50 lakh in the immediately preceding previous year. Clear? So those are pair. Time of deduction, again the same, the payment or the amount credited, whichever is earlier. Rate of TDS I've explained you. If you are an individual HUF, pay the contractor. If the contractor is an individual HUF, 1%, other case 2%. Threshold limit, there are two threshold limit. Individual contract, if exceeding 30,000, TDS would be deducted. Suppose Mr. A work with Mr. B and contract values like this. First contract was 40,000 rupees in the same financial year. Second was 25,000 rupees. Third was 20,000. Fourth was 20,000. Or suppose there is only three contract, no fourth. So on this contract, TDS need to be deducted because it is individually exceeding 40,000. No need to check the 1 lakh rupees limit. But this is individually is not exceeding 30,000, and in aggregate now it is only 65,000. So again, no TDS. Again, one more contract with this same person with 20,000. So now again, it is not exceeding 20,000, and in aggregate it's 85,000. 65, no TDS. 85, no TDS. So if this is the situation, only three contract, then only TDS on contract number 1. Suppose with the same person, we have made one more contract in the same previous year for 30,000 rupees. Or not 30,000, let's make it 25,000. So again, no individually does not exceeding, but now 80,000 and 25,000. So now we are on 1,10,000. Now TDS need to be deducted. Suppose the contractor is individual, so rate of TDS would be 1%. How much TDS amount need to be deducted on this 1,10,000? Do not charge 1% on 1,10,000 because in this 1,10,000, 40,000 has been already included on which TDS has been paid. So we are including 40,000 just for checking the limit of 1 lakh. If you deducted 1% on 1,10,000, so technically you are charging TDS twice on the value of 40,000. So if the limit has been exceeded and TDS has been deducted on any amount which has been included in this limit, we have to reduce it for the purpose of calculation of TDS. For the purpose of limit, it will include, but for the purpose of TDS deduction, that amount need to be excluded again. That would be 70,000. So TDS would be 1% of 70,000, that is 700 rupees. So that's a very interesting example. You should keep it in your mind for the purpose of examination. So limit is 30,000. However, to prevent the practice of composite contract being split up. So when the limit was made 30,000 each contract, people start splitting up the contract. So it was a single contract of 1 lakh. What they start doing, 1,10,000. What they start doing, they have split it into 25,000, 25,000. So to avoid that practice, this 1 lakh rupees aggregate concept has been introduced. So individual contract, if exceeding 30,000, TDS. If aggregate exceeding the single same person exceeding 1 lakh, the amount need to be liable to deduction of TDS. So you can see this example. It's exactly the same example we have discussed. 20,000, no TDS, 25, no TDS, 28, no TDS. But when the last payment was there like 30,000, now at the time of last payment on 1st March 2025, the aggregate limit has been exceeded. So TDS would be there on 1,03,000 rupees, 1030. Now, what is the definition of work? And I told you every kind of work has been included in this, whether for advertisement, whether for catering, broadcasting, thing, etc., etc. Everything has been included for this definition. However, work shall not include manufacturing or supplying a product. Now, a very interesting point also in there, which could be asked in the examination. Let me explain you. Anil Army is saying, sir, in case of cost plus contract, how will TDS be deducted? 194C, pay contractor deduct the TDS. No. Pay cannot deduct the TDS. Contractee will deduct the TDS. Who is the payer? Who is the payer? If I am a person who make a contract with a contractor, so I am the payer and I would be called contractee. So contractee need to deduct the TDS. Clear? Not the contractor, he is the receiver. Okay. So now in case of work contract, if material also included, suppose we have given a work contract for shoe manufacturing to a labor that he needs to manufacture shoes on our behalf, and then we are going to pay him for the labor and the material also, and the material also supplied by me to him, or whether material has been used by himself. So there would be two cases. If there is material also involved in with a work contract, then the payee will raise an invoice. Suppose there is a work contract including material. The material cost was, which has been used by the payee himself, 1 lakh rupees, and the labor charges, suppose 40,000. So total amount was 1,40,000. So if he raise invoice via showing separate value of material and labor, if the invoice has been separately shown this value, then TDS liability in a section 194C upon the payer would be only on 40,000 rupees. That would be a part of work contract, and 194C would be applicable on the payment of this value because material does not fall under section 194C at all. But suppose if pay raise the invoice like this, material and work 1,40,000. Separate value of material and labor has not been bifurcated, then the full value will be liable for section 194C. The full value will be treated as work contract and TDS would be liable upon full value. So if there is a contract which is including material also, the invoice need to be separately framed with the material value and the labor value. Otherwise, TDS would be applicable on full value in this case. So that is the provision which has been explained over here. However, work should not include manufacturing or supply a product according to the requirement specification of a customer by using the raw material purchased from a person other than such customer or associated such customer as such a contract for sale. However, this will not be applicable to a contract which does not entail manufacture or supply of an article or thing. So this is the provision which talks about how to represent the invoice. It may be noted the term work would include manufacture or supplying a product according to the requirement or specification of a customer by using material purchased from such customer or its associate. In such a case, tax shall be deducted on the invoice value, excluding the value of material purchased from such customer, if such value is mentioned separately in the invoice, where the material component not separately, the full invoice value shall be the value for the purpose of section 194C. Now, non-applicability. On some case, this is not applicable. The first exemption is for no deduction is required to be made from some credit or paid or likely to be credit or paid during the previous year to account of a contractor who is involved. You must have read these provisions under PGBP. plying and hiring of motor vehicle under section 44 AE, I guess. During the course of the business of plying, hiring, or leasing goods carriages, if he furnishes pen to the deductor. So if you are a transporter, if you are involved in the plying, hiring of motor vehicle, and if you furnished your pen number to the deductor, to the payer, then there is no requirement of applicability of TDS provision. Some condition need to be fulfilled. Those plying, hiring, those has been included under presumptive taxation scheme. Remember that under PGBP, who owns 10 or less good carriages at any time during the previous year. For those person, there was a calculation of income on the basis of per tonnage capacity, 1,000, 1,500 rupees per tonnage capacity. For those transporter, if those are the pay in section 194C, there is no TDS concept. First condition, you should be the owner of 10 or less good carriages at any time during the previous year. So these are for the purpose of pay. This requirement need to be fulfilled by the pay, the contractor. Is engaged in the business of plying, hiring, or leasing of goods carriages and has furnished the declaration along effect with a pen. So if these three conditions has been fulfilled, then section 194C TDS is not going to be deducted upon such person. Meaning of goods carriages, you can go through with that. These points are just explaining the things. You can read it just. Certain concessions are granted to transporter operator. You can go through this session. They are just a theoretical provision. Under income tax, the benefit of transporter is per day payment was 35,000. You must have gone through with the provision. A single day payment, you cannot payment a same person more than 10,000. No, more than 10,000 for the same day, other than account pay check, etc. For the purpose of transporter, the limit is 35,000. So there's a benefit for the transporter. And the same case, section 194C give the benefit to the transporter if you are providing your PAN number, if you are in the business of plying, hiring, etc. goods carriages, and that is not more than 10 goods carriages at any time during the previous year. Section 194H, that is regarding the commission or brokerage. We have technically three commission TDS provision. So one is section 194D, that is for commission, insurance commission. One is section 194G, which is for lottery commission to lottery agent. 194D is for commission for insurance agent. G is for lottery agents commission. And for other commission is section 194H. So 194D and G, that is going to be discussed later. As I told you, dividend section 194 is going to be discussed later. In the same way, 194D and G also has been mentioned in the format which will be discussed later. So 194H is other than insurance commission and other than lottery agents commission. So any other insurance except 194D and G will fall in section 194H. Clear? Again, the rate was earlier 5% up to 30th September, and after that it is now 2%. That rate has been changed. Again, the HUF individual concept same as per section 194A, as per section 194C, and 194H is also included in that. So we have discussed the payer. Payer same under section 194A. Rate, you have to remember there are two rates. Up to September it was 5%, and now after September it is 2%. Time of deduction exactly same by payment or credit, whichever is earlier. Threshold limit is 15,000. So up to 15,000 there is no TDS, but if exceeding 15,000 TDS need to be deducted. Meaning of commission and brokerage, you can go through with that yourself. Non-applicability. So commission would not be applicable on professional receipt, etc. So commission would be a case in which you will get something as on licensing, etc. So this is not applicable on professional services, because for the purpose of professional services, we are having a separate section, section 194J. So this clarification you can go through. Non-applicability, first point. Now point number 6, which says applicability of TDS provision on payment by television channels and publishing houses to advertisement companies for procuring or canvassing for advertisement. Now, in case of this, for the purpose of this point, we can understand the provision in a simplified way. There could be three kinds of payment. Payment by client to advertising agency. So that is liable to TDS under section 194C, not H. So I am a client and I am giving some work to an advertising agency for making an advertisement for me, etc. So that is not section 194H. There is no commission. There is a payment for work. So that will come under section 194C. Now the second point says payment by advertising agency to television or media company. That is outside the purview of TDS. And media company or television payment to advertising agency in the form of discount or commission. This is also outside the TDS concept. So these 3 points is going to be discussed over here. Applicability of TDS provision on payment by television channels and publishing houses to advertisement companies for procuring or canvassing for advertisement. So it says there are two types of payment involved in the advertising business. First one is payment by client to advertising agency, and that is going to be outside the purview of section 194H. That is going to be included in section 194C. Now the second payment by advertising agency to the television or newspaper, no TDS under section 194H. The applicability of these payment has already been dealt in circular number so and so, where it has been clarified in question number 1 and 2 that while TDS section 194C will be applicable on first type of payment, there will be no TDS under second type section 194C on second type of payment, that is payment by advertising agency to the media company. Clear? You can read the provision again. Same concept has been explained, and we are having an example also. Now Moon TV, a television channel, made payment of 50 lakh to a production house for production of program for telecasting as per the specification given by the channel. The copyright of the program is also transferred to Moon TV. Would such payment be liable for deduction at source under section 194C? So Moon Television have made payment 50 lakh to a production house to make a serial for them, etc. And the copyright, etc. will be with the Moon TV channel. So it's a kind of a work which has been assigned for preparation of a program, any serial, etc. So that would be a work which need to be undertaken under this a contract work. So section 194C would be applicable in this case. Also examine whether the provision of tax debt at source under section 194C would be attracted if the payment was made by Moon TV for acquisition of telecasting right only. Now the content has already been produced. So if the serial has already been produced and we are just acquiring the telecasting right. So there is no work involved in this case. So section 194C would not be applicable in this case. Following the solution also, you can go through it. Now section 194I, that is a very, very important section in my point of view. Before that, let's see if there's any query. Larry is saying these omitted sections were not there in syllabus of intermediate, sir. The second case illustration 5 is outside the purview. Yes, it is outside the purview of TDS. Correct. Absolutely correct. Okay. Now section 194I talks about the rent. TDS on rent. A very interesting provision. We have section 194I. In the generally provisions, we have discussed three sections in which individual HUF has not been included if the preceding previous year turnover was less than 50 lakh and 1 crore. In the same case, section 194I, payer has been exactly the same. A person other than individual or HUF who is responsible for paying to a resident. So pay should be a resident. Payer could be anyone except that individual HUF whose turnover is not exceeding 1 CR or 50 lakhs. So payer has been sorted in this case. Pay should be resident, that we also discussed. Rate of TDS is multiple rate of TDS. It would be 2% TDS if the rent is for plant, machinery or equipment. 2%. It would be 10% in respect of other rental payment except this plant, machinery or equipment. Clear? Like building, etc. Furniture, etc. Time of deduction exactly the same, the credit or payment, whichever is earlier. Threshold limit is 2,40,000 rupees. Now, technically, in case of salary, we have discussed, salary is a payment which need to be made every month. So TDS need to be deposited, of course, every month. And other payment like interest on security, like interest other than interest on security. It could be monthly also, it could be quarterly or half yearly also. So there is an option. Then lottery winning, etc. That could be occasionalized. Section 194C, that could be on a basis of any event or occasion. Again, 194H also, that is not a regular payment, but the regular payment is under salary and technically under rent. In case of rent also, the payment could be regular, monthly. So again, in case of rental income, TDS would be deducted monthly as in case of salary. Now, threshold limit says there is no single threshold limit. The threshold limit is aggregate, and that is 2,40,000 rupees in a financial year. So if I am a payer, I am a tenant, and if I am paying rent to a landlord, and the aggregate of estimated rent what I am going to pay is exceeding 2,40,000 in a financial year, then TDS required to be deducted monthly. For example, I have taken a building on rent. Suppose the rent is 30,000 per month, and I have taken this building on 1st April 2024. So on the estimation of that, I have taken the building for the whole year as per the rent agreement. So the 30,000 into 12, that means 3,60,000 would be the rental value. So that means TDS has been applicable. The rate would be 10% in case of building. Clear? Suppose the rent is 30,000 and this is on 1st April 2024. So the estimated rent would be 3,60,000. So that means it is exceeding 2,40,000 TDS applicable. Now the rate is 10%. So whenever I will pay the rent to the landlord, the 10% of the rent, that means 3,000, I will deduct as a TDS, as a payer, and I will pay him 27,000 every month. It will work like this. Suppose I have taken this building on rent on 1st October 2024 at 30,000 rupees per month. So the remaining time is now 6 months. So aggregate rental value would be only 1,80,000. It is less than 240. So no TDS for this year. If the rent increase between the year, accordingly, the TDS value would be, of course, increased. If the rent decrease, the TDS value could be decreased. So first month we have charged 30,000. In the second month also 30,000. Suppose from third month, the rental value has been reduced to 28,000. Still, the aggregate would be more than 240. But if the monthly rent has been reduced to 28,000, then the TDS would be 10%, 2,800 rupees per month. Clear? Very simple mathematics. Now, meaning of rent, you can go through it. Rent means rent, okay? Point number 6 is very important. So these kind of points are very important, which is having some specific clarification, etc. So probability of these kind points could be asked in the examination is higher than the normal provision, like there is a rental value, so you can easily calculate the TDS amount. But these are the things which has been specifically mentioned in your study material as an exemption, not applicability, or special cases. That is really important for the purpose of examination. Now taking the example of a cold storage. The question says, chalo, I will not show you the solution. We discuss the question. Applicability of TDS provision under section 194I to payment made by customer on account of cooling charges to the cold storage owners. So what happened in a cold storage business? Suppose there is a cold storage. Here is a farmer. Okay. Here is his goods like agricultural produce. He stored this agricultural produce in the cold storage, and against which he pays rent or whatever name it is. The question is this, whether this rent will fall under section 194I, whether you name it rent, cooling charges, whatever it is. So whether it will follow section 194I or not. So this was a question in point number 6, whether TDS provisions under section 194I to payments made by a customer on account of cooling charges to the cold storage, whether it is fall in the definition of rent or not. And if it is not fall in the definition of rent, whether TDS need to be deducted in 194I or not. And if it not in section 194I, then is there any other section which will cover this kind of payment from the payer to the payee? 35 AD business is for business PGBP head. We are discussing about from the point of view of TDS provision, Hardik. We just need to know whether this could be called a rent. And 35 AD business from the point of view the owner of the cold storage. We are discussing about from the point of view of payer. Payer is the farmer, etc. The correct answer is this is not rent. For the purpose of rent, there should be a possession of property in our hand. We should be a tenant now. We are going to possess some part of any premises, or there is some kind of asset which is in our possession at least. Whether it's a rent, machinery. If you are take a machinery on rent, so at least the possession is with yourself, or you are a tenant in a building, so that part of building is in your possession. But in case of cold storage cooling charges, the farmer just gives his agricultural produce to the owner of the warehouse. He kept his agricultural produce in his warehouse or a cold storage somewhere, but there is no premises possession of the farmer or the tenant on that particular area on which the goods has been kept by the warehouse keeper. So technically, it's not a kind of rent which is generally included in the definition of rent. So no TDS on section 194I, but it is kind of a work contract. The work is to preserve my goods. So section 194C would be applicable in this scenario, not section 194I. So this is a very important question. And in my opinion, this is the kind of question which could be asked in the examination. That has been explained. Payment by customer, cooling charges to the cold storage. And the concept is the same. For the purpose of calling something rent, there must be a possession of something with the tenant. The main function of cold storage is to preserve perishable goods by means of mechanical process and storage, etc. The customer is also not given any right to use any demarcated space or place or the machinery of the cold storage and thus does not become a tenant. Therefore, 194I not applicable, but section 194C would be applicable in this case. You can see that. Okay. Point number 7 is also a kind of a clarification. No requirement to deduct tax at source under section 194I on remittance of passenger service fees by an airline to an airport operator. So the airlines like Indigo, etc., they generally pay a piece of passenger services fees to the airport because airport is providing the area for their passengers. So is it a kind of a rent? Again, in this case, that airline does not have any possession right on that space. In this case also, it would not be calculated or counted as section 194I rental value. Clear? English again. Directly the airline does not have any the possession of that space. Only the, like in that case also you can see the airport is like a warehouse keeper. We are like the agriculture produce and the airline is like the farmer. So technically the same thing is happening. We are the goods. We are at the airport and for that purpose, airline is going to pay the passenger service fees to the airport authority. So again, there is no possession. There is no rental intention was that an agreement. So section 194I would not be applicable. Eighth point is very general and common point. Whether section 194I to service tax or GST component of rental value. So TDS will be deducted always on the fees value, not only any tax value. Suppose there is rent value of 1 lakh. And GST applicable 18%. So that component value is 180. So now if the TDS need to be deducted, whether it need to be deducted on 118 or it's need to be deducted on 1 lakh. So in all cases, all TDS cases, if there is a GST, service tax, earlier service tax was there, or any kind of sales tax, etc. has been included in invoice, TDS value would not be applicable on any government taxes. It would be applicable on the main component of work contract or rental value or commission value, etc. It would not be deducted ever in case of GST or any kind of government tax value. It has been explained in detail over here because service tax has been omitted now. So the same concept has been explained in GST. That is also has been mentioned in this provision. So you can go through it, not a very important provision from the point of view of examination because it's a very simple concept that there could not be any TDS applicability on GST part, service tax part or any kind of government tax part. Okay, next is clarification on applicability of TDS provision of section 194I on lump sum lease premium paid for acquisition of long-term lease. The provision says if any kind of lump sum payment has been made for acquiring any long-term lease and it's not a part of your rental, then it could not be the part of your TDS for section 194I. The issue of whether or not TDS section 194I is applicable on lump sum lease premium or one-time upfront lease charges paid by an SSC for acquiring long-term leasehold right for the land or other property has been examined. So the regular payment of lease, that could be the part of section 194I, but the one-time fees, which is called a lease premium, that would not form part of section 194I. Accordingly, CBDT has wide the circular clarified that lump sum lease premium or one-time upfront lease charges, which are not adjustable against periodic rent, paid or payable. So if they are allowed to adjust against your periodical rent, then it will convert as a rent and TDS would need to be charged. But that if it is kind of a lump sum payment, one-time payment, and rental value is separate, then TDS would not be applicable on those lump sum or one-time payment value. XYZ Limited pays 50,000 per month as rent to Mr. Kishore for a building in which one of its branches is situated. Discuss where TDS provision section 194I attracted. Look, payer is XYZ Limited. So it is not individual HUF. So any other person except individual HUF is included. 50,000 per month. So for the whole year, it would be 6 lakh, exceeding 2,40,000. So TDS provision has been applicable, and yes, TDS need to be deducted every month. Section 194 IB. Now, there were 3 sections, very important 3 sections, what we have discussed, on which non-applicability was there. Section 194, actually 4 section, 194C, 194 we discussed H, 194I, and there would be 194J later also. So this is not applicable for those individual HUF less than 50 lakh and less than 1 crore turnover. It does not mean then they have been exempted from the TDS provision. For those individual HUF, those are the payer, but not included under section 194C. For a work contract, a new section has been introduced, section 194M. So for other payers, except individual HUF less than 50 lakh or 1 CR, 194C is there. But it does not mean that these individual HUF has been escaped from TDS provision in case of work contract. No, that has been included under section 194M that we will discuss. Again, section 194H, that is for commission. Again, these has been excluded. But again, section 194M also covered these kind of person paying brokerage or commission having less than 50 lakh or 1 crore turnover. Section 194I, again these has been excluded and they have been included in section 194IB. So for 194IB is for those individual HUF, those are covered under section 194IB because they are having less than 50 lakh or 1 crore turnover. And 194J that we are going to discuss later for professional, technical fees, etc. Again, individual HUF less than 50 lakh, less than 1 crore has been excluded. But they are also included section 194M. So 194M including 194C, 194H and 194J pairs. Those has not been covered under these respective sections. So 194M covered, individual HUF there. And 194I has been covered under section 194IB. One very important point under section 194C need to be discussed. Under section 194C, very interesting point, you should remember this one. The provision says, suppose there is an individual who is a payer, that means who is a contractee, and his turnover was exceeding 1 crore in previous year 23-24. So that means he has been included in a section 194C. He make a work contract with a contractor, and the work contract fees was 10 lakh rupees. So you can see he is fulfilling all the condition. He has included in the definition of payer. There is a contract for work, that is section 194C, and fees is exceeding rupees 1 lakh. The fees is 10 lakh rupees. So technically, the section should applicable and TDS need to be deducted by the payer. But this is an exception. This is an exemption has been provided. It says if the payment has been made by individual or HUF to a contractor for work contract, but the purpose is for his personal use. Suppose he is paying 10 lakh rupees to a contractor for construction of his residential house. That is a personal use. If he is paying for the construction of his office building, factory building, then TDS would be applicable. But if it has been paid for personal use, for construction of residential house, etc., then that is outside the purview of TDS. So this one more exemption was very, very important under section 194C. The same would be under section 194J in case of professional receipt. We will discuss it under section 194J. But this is very, very important for the purpose of your examination. Look, because TDS is a very huge topic having multiple points. So we need to consider only those points. Those are important and very important. And I'm asking you to read other point also. So please, during this time duration, our next class is day after tomorrow. Kindly read all the concept what I've asked you to read yourself. And if there's any issue, there is any important thing, if there's any confusion, you can ask me in the class day after tomorrow. Because if I am going to read each and every point, that is procedural part, general process, general things, so that would be really difficult to cover this topic. Clear? But let me tell you, I am covering all the important things, or even those things, those are less important. Only those procedure part in which there is nothing technical is there, or you can read yourself, or there is like you need to submit this form, etc. That is not that much important from the point of view of examination. So I'm just leaving it on yourself. So you have to go through with those provision yourself. Okay. If there's any query, you can ask me. And then we will have our story. If you want to listen, I will tell you a very simple, very interesting story, and then we will close our class. Manoj is asking, sir, in the case of base metal capped and storage areas and rent charges, it is for section 194I. Manoj, we have to understand the agreement of that rent for which the base metal has been capped. So if the tenant has the permission to check the premises at his own, anytime he can go, he can open the lock, he can check the premises, he can check his goods. If this kind of power has been provided to the tenant, it could be the rental value. I already told you that in case of rent agreement, there must have some power with the tenant regarding this premises or the machine. So if the power is with the tenant to check the premises, to can go and he can sorted his goods from the other part, then definitely it could be termed as a rental. Otherwise, it could be a section 194C cold storage. Oh, sorry, section 194C for work contract, etc. PSA, which TDS section will it cover? It will not cover section 194I at least. It could be covered section 194C, of course. फर्स्ट क्वेश्चन ऑफ सर्कुलर का नितिश कौन से पेज पर है? फर्स्ट क्वेश्चन ऑफ सर्कुलर ये कौन सा? Which section you're talking about, Nitish? Kindly write down the section. Pallavi is saying, sir, in all cases, exemption amount is for per annum. Yes, in the all cases, there is no, each payment is like section 194C. 30,000 is for each payment, of course, but in otherwise, it is where it has been written that in aggregate, it need to be checked. Then it means for the full year, we are need to check that 7.19. Page number second point. I have given you to understand these provision for today. If I have given you something to read, kindly read it for today, and you can ask these kind of query day after tomorrow, because other student will also go through with the same provision. So if they go through with the same provision, and then we will solve these kind of query, those points I have asked you to learn yourself, to read yourself, that would be discussed day after tomorrow, not today. Okay, so we have covered till section 194I today, and please try to make short notes of TDS section and deductions also. That is going to help you a lot at the time of examination or when you start revisioning it, because you can see in the TDS how many points and sub points are there. So if you try to revise each and every point every time, there are multiple points that have no importance or not that important for the purpose of examination. So please make short notes. That is really going to help you a lot in your examination. So there is no more query, I guess. So a short story for all of you. In 5 minutes, we will close this session. और ये मैंने स्टोरी भी कहीं पढ़ी थी थोड़ी सी, और बहुत ही अच्छी स्टोरी थी. एंड ये अभी रिजल्ट आया है सीए फाइनल का. मेरे ऑफिस से 2 आर्टिकल सीए बन गए हैं, एंड congratulations to all of those who have cleared it, of course, and you will be the next to give examination after after like 1 year or 1.5 year. Story could not be in English because हिंदी में बच्चों को ज्यादा समझ में आती है अच्छी तरह, एंड इट्स माय आल्सो प्रेफरेंस कि बच्चों को थोड़ा अच्छी तरह समझा पाए. सो द स्टोरी वाज लाइक दिस. एक स्कूल था. ओके. Pallavi is asking, sir, in 194C, if aggregate limit exceed 1 lakh, but individual limit not exceed. And we have discussed this kind of question, Pallavi, in the illustration also, and I have explained you also. Does your query is having anything else? Yes, TDS need to be deducted on the whole value. We have discussed this kind of question. If the contract was 20,000, suppose it's 30,000 each contract for 30,000. And first contract, no TDS, second is 60,000, no TDS, third is 90,000, no TDS, but the fourth contract would be 1,20,000. Then TDS would be on the full value. Okay, we have discussed this question. So story was like this. बच्चों फटाफट सुन लो, फिर सेशन क्लोज करना है हमें. It will take 4 or 5 minutes. एक स्कूल था, वहां पर एक बच्चों की रेस हुई. 50 बच्चों की रेस हुई, 50 बच्चों की. स्कूल में 1,000 बच्चे थे, 1,000. आउट ऑफ दोस 1,000 बच्चे 500 लोगों ने पार्टिसिपेट किया. उसमें से 50 सिलेक्ट हुए फॉर द फाइनल रेस. और वो जब फाइनल रेस हुई तो जो फर्स्ट सेकंड थर्ड प्लेस पे बच्चे आए थे उनको प्राइज मिलना था और बाकी सबको कुछ भी नहीं मिलना था. तो एक बच्ची जो दौड़ रही थी रेस में, वो 5th नंबर पे आई, 5th पोजीशन पे. और उसके फिर पापा उसके पास आए, और वो लड़की बच्ची बहुत सैड थी कि पापा मैं हार गई. उसके पापा ने कहा नहीं, तुम तो फर्स्ट आई हो, कॉन्ग्रेचुलेशन, बहुत बहुत मुबारक हो, यू आर फर्स्ट. चलो मैं तुम्हें आइसक्रीम खिलाता हूँ, या तुम्हें क्या खाना है बताओ. तो उस बच्ची को लगा कि ये क्या बात है, हाउ इट्स पॉसिबल, मैं तो फर्स्ट नहीं आई हूँ, मैं तो हार गई हूँ. तो वाई माई डैड इज सेइंग कि मैं फर्स्ट आई हूँ. उसने कहा मैं तो 5th आई हूँ और मुझे तो कोई प्राइज नहीं मिल रहा. तो उन्होंने कहा नहीं, आप 5th आए हो, लेकिन आप 45 जो बच्चे आपके पीछे थे उनमें आप फर्स्ट आए हो. उनके लिए जो आपसे बच्चे पीछे रह गए, उनके लिए तो आप फर्स्ट आए हो. तो मेरे हिसाब से तो आगे जो बच्चे गए हैं 4, उनसे फर्क नहीं पड़ता, बट आप उन 45 बच्चों से पहले हो तो आप उस हिसाब से फर्स्ट आए. तो एक बच्चा जो वहां पास खड़ा था, जो 50 नंबर पे आया था लास्ट, तो उसने कहा कि इसका मतलब मैं फेल हो गया हूं, मतलब मैं तो 50 नंबर पर आया हूं, तो यानी कि मैं हार गया, आई लॉस्ट इट, बिकॉज ये 5th पर आई है. तो आप कह रहे हो ये फेल नहीं हुई है, शी इज सक्सेसफुल, और मैं तो 50th पर आया हूं, तो मैं तो फेलियर हो गया, मैं नहीं जीत पाया, आई लॉस्ट इट. उन्होंने कहा नहीं नहीं, तुम भी फर्स्ट आए. तो मैं कैसे फर्स्ट आया? तो उन्होंने कहा जो 500 बच्चों ने टेस्ट दिया था, जिसमें से आप 50 में क्वालिफाई कर गए, तो आपसे जो पीछे बच्चे हैं, आप उनके लिए तो फर्स्ट ही आए हो ना। तो उसने कहा फिर फेल कौन हुआ? जो मुझसे पीछे रह गए, जो क्वालिफाई नहीं कर पाए, वो सारे फेल हुए। नहीं, वो भी फेल नहीं हुए। उनमें से वो सारे बच्चे जिन्होंने ट्राई किया अपना बेस्ट, अपना अपना सबने ट्राई किया बेस्ट, लेकिन फिर भी क्वालिफाई नहीं कर पाए, वो भी फेलियर नहीं। तो टेक्निकली फेलियर कौन हुआ? फेलियर सिर्फ वो हुआ जो ट्राई ही नहीं कर रहा था, जिसने अपना बेस्ट देने की कोशिश ही नहीं करी, जो उस रेस के लिए कभी क्वालिफाई नहीं करना चाहता था, और वो उतने एफर्ट ही नहीं करना चाहता जिससे वो जीत सकता था। जो 500 में से भी सिलेक्ट नहीं हुए, मे बी वो नेक्स्ट टाइम में सिलेक्ट हो जाएंगे, मे बी वो नेक्स्ट टाइम में अपने एफर्ट से आगे सकते हैं, बट सिर्फ फेलियर वो माना जाएगा जो अपने एफर्ट ही करने से पीछे हट जाता है। जो उस रेस के लिए जो रिक्वायर्ड मेहनत है, अगर आप वो नहीं करें और सोचे सिर्फ बैठे बैठे सक्सेस मिल जाएगी, दैट इज नॉट प्रैक्टिकली हैपनिंग, दिस इज नॉट गोइंग टू बी हैपन। सो इन अ सीरीज ऑफ एग्जामिनेशन ऑल्सो, आप लोग अपने एग्जाम के लिए मेहनत करते हो, आपके दोस्त आपसे पहले सीए बन गए होंगे या फाइनल में होंगे, यू आर एन इंटरमीडिएट, तो आप अपने लिए इस रेस को दौड़ेंगे सर। आप उनसे तो आगे हैं जो आपसे पीछे थे, और वो हर बच्चा टेक्निकली सक्सेसफुल हो जाएगा लेटर और सूनर, जो अपनी पूरा बेस्ट एफर्ट देगा। तो सिर्फ वही बच्चे फेलियर माने जाएंगे जो बिना एफर्ट के पास होना चाहते, या इस कोर्स के लिए जो रिक्वायर्ड जरूरत है, जितनी रिक्वायर्ड मेहनत है, डेडिकेशन चाहिए, उसके बिना पास होना चाहते। एवरीवन एल्स इज अ फाइनलिस्ट, एवरीवन एल्स इज गोइंग टू बी अ सक्सेसफुल वेरी सून। बड़ा प्रैक्टिकल सा मेरी एक आर्टिकल सीए बनी है, एंड वो 1 साल पहले मेरे पास आई थी। उसने 4 अटेम्प्ट दिए, और वो चारों फाइनल के अटेम्प्ट, मतलब उससे पहले इंटर में उसने एक एक बार में अपना ग्रुप निकाला। शी इज अ काइंड ऑफ आर्टिकल स्टूडेंट, जिसको हम कहते हैं कि शी इज इंटेलिजेंट, एंड आई गेस फाइनल एक बार में हो जाएगा। बट उस स्टूडेंट का 4 अटेम्प्ट्स में फाइनल का एक भी ग्रुप नहीं निकला। लास्ट ईयर शी केम टू मी एंड आस्क्ड कि सर क्या छोड़ दूं, सी ये नहीं हो रहा मुझसे। और प्रॉब्लम वही कि जब आप थोड़े से ज्यादा होशियार बच्चे होते हैं तो लोगों की एक्सपेक्टेशन ज्यादा होती है। तो शी वाज सेइंग मैं कहीं जॉब कर लेती हूँ, आई शुड लीव दिस, मे बी ये कोर्स मेरे लिए नहीं। मैंने आस्क्ड हर कि ट्राई करो, इफ यू विल नॉट लीव सीए, सीए विल नॉट लीव यू। एंड लास्ट उसने मे अटेम्प्ट दिया, शी क्लियर्ड फर्स्ट ग्रुप, एंड अभी नवंबर में शी क्लियर्ड सेकंड ग्रुप, एंड नाउ शी इज अ सीए। सो अगेन, आप एफर्ट करोगे ना अपना बेस्ट, तो लेटर सूनर यू विल बी अ चार्टर्ड अकाउंटेंट। सो फॉर ऑल द बेस्ट, एंड वी विल सी ईच अदर day after tomorrow. Please revise these provision, make short notes, that is going to help you a lot. In the next class we will discuss the provisions of TDS and as well as the advanced tax and TCS provision. So Bhargav ji, can we close the session?